Good morning, everyone, and welcome to the show. Honest to goodness, the markets and the world today are in so much stress, they're so over-leveraged, that this is just like going to a three-ring circus. Welcome to the show, everyone. Anyway, listen, let's get started. Let's open up the charts right here, and let's start with the silver price. Silver price has been shooting up this morning. She's up 14 cents today on the day so far. She did rise above $15 for a little bit there a few minutes ago, but she's dropped back now. Silver's running strong. Let's take a look at gold today. Gold up $12.20, and it was up to almost $13.45. It's dropped back down to the 13.30s again right now, but it's up $12.20. So gold and silver are doing good today. What about crypto? Crypto settled back a little bit, you know. Its market cap's just under $250 billion with a Bitcoin dominance of 55.6%. And it's drifting along. Expect this for the next little while. On my show called The Delta Report, I do exclusive reports on cryptocurrency, and on my show there I said that I called it right at the top of this last leg up. I called it, and I said it was going to go sideways for a couple months. And it's doing just that. It's going sideways now. Anyway, I expected it for a couple months, and we're a week or two into that already, this sideways movement, before the next leg up. It's going to come a little while. Now, there's only one thing that can affect this negatively, and that's if we go and have a sudden shock to the markets and everything, and everything falls off, and we get a bit of deflation rearing its ugly head. Could affect the price of cryptocurrencies. But being as the Fed is totally behind the markets now, you know, I'm not expecting that to happen so much. The Fed's changed their policy, they've changed their position without waiting for the market crash that was inevitably coming. If they had to continue with the policies that they had, the central bank now controls everything. They control the markets completely. And what the central banks say have everything to do with where the markets are going. It also has everything to do with the dollar now at this point. The dollar is going to start to weaken significantly if the central bank goes into a very dovish monetary stance. And this is what's happening. Now, cryptocurrencies is doing rather well to go sideways for the next little while before its next leg up. Let's take a look at the Bitcoin price specifically. $1,777. Let's refresh the page. $1,785. It's down 3.12%, but it's bouncing back slightly. Probably today, I think it's going to bounce back a little bit more toward $8,000 today. That's kind of what I'm expecting. Anyway, let's take a look at the Dow Jones today and see what it's doing. I'm going to refresh the page. We're up 131 points today, which is showing a lot of strength, really, considering the bad jobs report we just put in. Let's take a look now at crude oil. It's off 74 cents on the day. It's down 1.38%. We're looking at $52.74 for sweet light crude. And we see the price is dropping today on sweet light crude. Now, let's go and take a look at the Treasury Market. It's at 30-year. That's the last holdout for the yield curve inversion. And it's at 2.62%. Now, the 30-year is funny. All the rest are dropping. The yields are dropping on all the rest except for that 30-year. That 30-year has been the holdout all along. We have the yield curve inversion stretching all the way out to the U.S. 10-year. A very strong yield curve inversion. The 10-year is priced cheaper than the overnight rate, from what I understand. I mean, this is completely ridiculous, but the 30-year has been the only holdout in this bond rally that has seen the yields drop incredibly. So we're going to keep a close eye on this yield curve inversion as it plays out. It's a sure sign, though, that a recession is coming. Let's take a look now at the U.S. dollar index, and we see it's finally dropped down below 97, 96.90. It's dropping today a little bit. So we got a dropping U.S. dollar today. Now, let's take a look at earthquakes overnight. And we see it's pretty typical. This is typical of these earthquakes up here in Alaska and the earthquakes in California. And an earthquake, I think it's around Oklahoma. Let's focus in a little bit. They always get a couple little tiny earthquakes in Oklahoma. You know, in around just north of Oklahoma City. It's tiny, tiny little, what I call dish shakers, magnitude 1.2. Let's go take a look and see what's happening with the Ebola outbreak in the Congo. We got 2,000 infected now. The outbreak is growing a little bit. The last time I reported on it a few days ago, it was at 1,800 and just slightly over 1,800. Now it's 2,000. Now, we're going to move on to U.S. Treasuries. Treasuries have resumed the rally. There's dismal jobs report. We got a dismal, absolutely dismal jobs report. New York, Reuters. The U.S. Treasury market resumed its recent rally on Wednesday with two-year yields hitting their lowest since December 2017 following data from the ADP that showed private domestic jobs growth decelerated to its weakest level in over 9 years in May. So, we've got a bad jobs report, and that bad jobs report, the stock market's going up. You know, the stock market has been going up on good news, and it goes up on bad news. And why it goes up on bad news is because they realize that that's going to stimulate the Fed into weaker monetary policy. So the stock market goes up on bad news, it goes up on good news for the economy. We are living right now in very, very strange times. Now, there's threats. Donald Trump over in Iran, he's got his ships parked near Iran. He says that he is not going to rule out military action in Iran while the ships stay there. So, in fact, the United States is watching that area extremely closely. Extremely closely. Right now, they're watching that area. They got their ships parked right there. If Iran does anything crazy, like shoots a missile or something, anything could pop, it could set that thing off. But the United States, they do not want to get bogged down. And this is the problem with Iran. Not like Iraq. I remember the night they were riding through Iraq, you know, during, I can't remember, Desert Storm, I think it was called. Anyway, I remember the night they were riding through, they had a camera on one of their Jeeps, and they were just marching through Iraq into Iraq during the Iraq war, and they were driving through the desert, you know, and they were just basically, it was just open desert. There's no place for the enemy to hide. They can fly over with jets and strike anything, and they just basically take territory because it's open desert. It's easy, you know. But when you get into deeply entrenched warfare, kind of like what happened in Vietnam when they dug little tunnels into the ground everywhere, you know, and it was just a mess, and you can get bogged down. And this is the trouble with a war in the Middle East with a country like Iran, is you can get bogged down. And they're a little bit scared of that. They're a little bit apprehensive to get this started, you know. And that's the reason why, is they don't want to get bogged down. And so now let's take a look at the German Deutsche Bank. Whoever's pouring money into this, I don't know who's buying the Deutsche Bank stock, but whoever's pouring money in this, they have to realize that if they want to keep Deutsche Bank stock above €6, they are slowly, over the next few months, going to have to buy them all. They're going to have to be the sole holder of Deutsche Bank stock in the end. Because it's like putting, right now, for them, it's like putting money into a colander. They dump the money into Deutsche Bank stock, they prop it back up for a day, and the next day it starts to slide again. If they want to keep Deutsche Bank up and running, they're going to have to keep buying these stock until they own them all, and they're the sole owner. Well, only a government would be that stupid, I think. I'm not sure. I'm not sure about that, but the governments are buying up everything. I mean, take a look at Japan, what they're doing in their bond markets and stuff, Just buy it all. It's monetizing your own debt. It's monetizing. This is what we're down to now. The governments are having to keep everything running by basically using the central banks to buy everything. Well, in the end, they'll own everything. They'll own the entire world. We won't own nothing. We'll just be debt slaves because they can print the money from nothing, and they can buy everything, and in the end, they own everything. In the end, I mean, it's just a ridiculous world we're living in. But, I mean, they've set this, it's a generational, debt-based, global, fiat money Ponzi scheme that they're running. It's a Ponzi scheme. And like all Ponzi schemes, it can only go out to a certain point where it starts to retract. And then what they're doing is we've hit that point. In 2008, we hit that point. And they're keeping it going by expanding the monetary supply. Eventually, that money's going to start to spill over and cause a hyperinflation worldwide. We've never had a worldwide hyperinflation before. We've always had localized hyperinflations where there's always some sort of a currency to reach out to. Generally, it's the US dollar, by the way, to reach out to use within the hyperinflation. So like in countries like Venezuela that has a hyperinflation, they reach out to the US dollar, or they reach out to Bitcoin, or have to reach out to something else because their own currency basically turns into mush, Well, what happens when the whole world, all the currencies turn into mush? They're going to reach out to something. Well, there's not very many places to reach for a global currency that they can use. They could use gold, real physical gold, but I mean, there's all kinds of problems when the whole world goes into a hyperinflation. How much physical gold is there out there that they could use in trade? And is it really set up to be facilitated for that? To go back to actually using coins. And you remember back in the Middle Ages, they used even little kids knew how to tell if it was real gold. They'd sit there and they'd bite it and they'd look at it and they knew how to. Nobody knows now. I mean, take a look at videos by Mark Dice, on YouTube. Just put in Mark Dice. He does these videos, where he goes out on the street with a gold coin, and he offers them now the gold coin's worth about $1,500. It's his gold coin. They could have it, right? He says, okay, here, take a chocolate bar or a gold coin, or a chocolate bar or a 10-ounce bar of silver, And they pick the chocolate bar every time because they don't know. If they knew, see, and the whole world's that way now. They're used to fiat money. They know what that is. But they don't know what happens when the whole world's fiat monetary system basically collapses into a hyperinflation, and the fiat's no good anymore. You have to reach out to something. Well, they could reach out to gold, but like I say, that's a difficult choice. These cryptocurrencies, though, are setting themselves up to become something that the world could reach out to during the hyperinflation that's bound to happen because of the mismanagement of the fiat monetary system worldwide and this global Ponzi scheme they got going. So we live in crazy times right now, a crazy upside-down, backwards world. Listen, thank you guys for listening to this report, and we'll catch you again very, very soon. Bye-bye, guys.